Hi, everybody. Ren, Brock, Hugo, how's everyone doing? Let's have a good week and take a look around. Hello, Alexander, Hugo. So I was looking at this NASDAQ. How are you, Didier? And if we get through this 13,010 level, it's actually going to measure up towards 14,000. The S&Ps, although they're down today, are a stone's throw away from new highs. We'll see if we get some type of hesitation here, but you guys know I'm looking for thank you, Mark, looking for 40.40 to 41.40 in the coming weeks. Could happen in the coming days. I think there's a significant top coming in S&Ps, and I know it's a boy who cried wolf, but some very smart guys. This is not just my view. I've done some intelligence gathering on this. That's how I came up with about 4,100 a few weeks ago after this pullback, which was pretty orderly, ABC, and now it looks like we're going to new highs. Euro pound on the daily looks great. I mean, look at this glaring divergence here. And, it looks, you could call this a breakdown. But then if you go to some shorter term TFs, not as good, right? Look at that RSI reading. So even if there is going to be a low, it has some work to do. So I don't know if I'd be in such a hurry, but I'm definitely monitoring it for something. In fact, the pound took out prior resistance that it broke down from, Hello Galaxy Arena, and is above it. So pound's still looking good, except look at this in the pound right now. I just noticed it. A little 1, 2, 3. I think the best looking besides the pound currency is Aussie. Talked about the 3 drives. Blake showed it after I brought this up. It's honoring the formation. Now we're on the 2-hour above the 200, and I don't see why 77 isn't viable. So I guess the overall theme is that the dollar short term could be topping. I don't think it's a major top. I think it's going to be enough for a pullback. Remember how 92 was so difficult to get through? See all of this? So for it to pull back near that level would not be unusual, and also would aid and abet push to new highs in the S&Ps. I don't think it's going to happen on the dollar exploding. Weak sister, of course, is euro. And even the euro, I don't know, we can't rally back to between 1850, 1880 is a possibility. And even if it made a new low, it won't confirm on multiple time frames. So even though it's a weak sister, doesn't mean that it can't go up. It's not the preferred buy because it's a weak sister, it's a preferred sell. So euro remains the preferred sell on a rally back up towards here. We start doing better than 119. Something else is going on. In fact, 119 is a 2-week off number. So we'll see if we could get a rally back up towards that area. And if gold takes out 1720, we should be on the way. We'll see what's happening there. US dollar yen, still no reason yet I see to short it. And crude up a little bit. I think it looks like they could free this ship. 62 is a big area, but so is 63. I'm going to be very curious to see where WTI is at if and when S&Ps trade about 40.40. So any questions on anything I've covered here today so far? And one last thing. Okay. It's because of vaccines. Okay. One last thing, USD CAD tried again last night to get through this wedge line here. So far unsuccessful. I'm hoping there's a bout of dollar weakness because I'd love to buy fib retraces in Canada. I think the next time we start a wave, if this is just the first wave and then we get a B or a 2, that's where I'd back up the truck at 61.8 or so. The off numbers this week is down around here as well. Okay. I'll let some of the other guys cover the crosses, the uncrosses, Didier. How are you, Blake? How was your weekend? Starting to heat up here in the high desert.
Oh, it's good morning. It's we're gonna reach
Early.
90 degrees today, so that's
Yeah.
I'm bummed out, because now it's, for me, I know it's pretty much the next 6 months for air conditioning.
Yeah.
So I look at it, it's like,
I know.
and I enjoy like this morning I have my window open and it's it's 4 or 5 o'clock in the morning here and the window's open, the weather's nice, but here in the next couple hours it's you have to shut the windows and it gets warm. So I know a lot of people probably are like, wow, I'd give anything for that heat right now, but yeah, it's pretty warm here. But yeah, hope you had a nice weekend. This is a shortened trading week. We have Good Friday on Friday, although we'll have non-farm payroll on Friday, but it's Easter weekend, so it's going to be a pretty interesting week this week, I think.
I'm kind of surprised they release it with markets closed.
Yeah, I'm not sure why. It's usually it just doesn't. Good Friday doesn't fall on Easter weekend doesn't fall on non-farm payroll or good.
Yeah.
Excuse
Anyway,
me, on Good Friday. So it's it's interesting, but it is what it is. So I think it's going to be a lot of there are going to be those participants like ourselves that will be will. And by the way, Dale, if you want to take the day off, don't worry about it. We but we're going to be covering non-farm payroll, and then after that it'll be going to taking a little bit of a break. So, but what also happened this weekend, Dale, is the time change in Europe. So
okay.
we've got, it's interesting every year, and it never ceases to amaze me, Dale, is every year during the time change where we have this 2-week gap between the US and European time, we lose a large portion of our viewers due to the time change. And then after 2 weeks, most of them come back. I mean, I get the reasons why. I mean, if your normal schedule only permits you to listen during this period of time, then that's that's what happens. But anyway, I always find it really interesting. So anyway, Europe and the US are back to their old differences in time now. So yeah. So
Okay.
Sensei says, we stupid in Europe, and it takes us 2 weeks to adjust to the early start. Laugh out loud. No, it's not you guys. Believe me, it's not you guys. It was our idiotic idea to change, wasn't it? Isn't that the way it happened? Wasn't it us?
I think we did make the change, Blake.
Yeah, I think we did too. It's anyway. Hey, I want to talk a little bit about Friday. So, we've gotten further information about what happened on Friday. Did you see what happened Friday afternoon, Dale? That big spike up in risk?
Oh, yeah.
Yeah. Are you familiar with what had happened?
No.
So there's a huge block.
Oh, you mean about some guy that had to have his portfolio blown out?
Well, yeah, it's like a hedge fund.
Okay. Yeah.
Apparently. So there's some updates from Credit Suisse, from Nomura, about they're going to take huge losses, based on this trading activity, and it was basically a margin call, like huge margin call, this huge fund that just basically got wiped out. And because of that, we saw this spike up in, the NASDAQ at the end of the day, the Dow, and that's before.
So was the guy short and blowing them out with short covering with buys coming in?
I'm assuming so. But Credit Suisse's loss could be 3 to 4 billion. Nomura said it could have a loss as much as 2 billion. I mean, those are huge losses. So I guess the reason why I'm pointing this out is over the weekend, I speculated about it on the week ahead video. Then we started to get more information yesterday because I'm like, I've heard that it could have been a big margin call that caused this move in equities on Friday. And that was my, that was a little conversation we had during the week ahead video. So if you watch the week ahead video, you're like, oh yeah, I remember I'm talking about that. Well, we got all this information yesterday from, these banks, and here's the risk. Okay. And this is the reason why I wanted to bring it up. Okay. So you've got to be really careful with, we haven't really heard from US banks, right? We haven't really heard any information yet. And the risk that it poses is that maybe some US banks look at what happened to Credit Suisse and Nomura Bank and said, we're going to reduce your margin requirement, for clients. So just keep that in mind, because that could be like the unintended consequence in the market today. And there's no need to jump the gun. There's no need to go, oh crap, let's go ahead and, we're going to sell some stocks here. I don't think you go about it like in that fashion, but that's like a bit of a concern right now. I think everybody's got their radar up. They're starting to, look at, okay, how are the US banks going to act today? Did they take any losses? Are they going to make their clients reduce liquidity? And that's, again, that's what people are paying attention to right now. And I think we have to as well. We have to, just think about that. Okay. So anyway, just some food for thought. And you pointed out, Dale, the sterling is stronger today. We've seen, equity market futures are down a little bit, but the FX market's been really quiet. The cable is bouncing back pretty good. The euro pound did break down, as you pointed out, and it took out all the stops below this 85.30 level. I thought we were basing, but we broke through all sorts of support, and matter of fact, we're testing again, a broken trend line. We might stall here, but this has really been the big mover overnight is we've seen, really the sterling moving higher.
I think when we were in the 90s, Stell's target was around 82. Are you here, Stell? Weren't you looking for 82?
I was talking about 83 to 84, if I recall. Let me check.
Okay, almost there. Will you buy it? Will you buy it down there?
I'm not sure yet, but I will definitely think about it. Yeah. I still don't want to be short the pound, but I think it's going to be a good place to take some longs, maybe. Yeah.
Okay. So there was some. I guess one of the things that we're seeing the pound rally on today is that I guess there's something about I don't know what the Bank of England would have to do with this, but anyway, the UK is trying to keep companies from leaving the UK and reestablishing themselves in different parts of Europe. But Mark in our chat room, he said, man, that ship has sailed. I don't know what you're going to, when you're talking companies that have already said, we're leaving the UK and we're going to move our headquarters, to Brussels or wherever. I'm just, wherever they decide to move. I mean, those plans were in motion a long time ago. What are they going to do to really change the mind of companies that have already gone that path, down that path. I don't get it. But anyway, I don't know if that's what's, goosing
Booing the pound.
Yeah, keeping
people
the
are saying it's their, the reporters or, people justifying the move are saying because they're doing so much better on their rollout of the vaccine than the rest of mainland Europe.
I don't know. Maybe, but I don't know. And I don't.
They don't have the
that.
shortages that like Germany and some of the other countries do for the rollout. So
yeah, it's interesting. It still is. How about you guys in Athens? And I don't know if Steve's there as well.
I am here, mate. Of course.
Are you guys able to get your vaccines yet, or
no? I mean, in the whole European continent, the process is going rather slowly. We are getting the population vaccinated from older ages to younger ages, obviously, right?
But it's very slow. It's like at the moment we're at the 70 to 75-year-old range that are getting vaccinated, and then
we've also vaccinated still part of the 60 to 65 population due to the AstraZeneca, which we couldn't give to older ages. Keep that in mind. So anyway, we've vaccinated most of the people above 70 now, and some of the people between 60 and 65. I know it sounds weird, but it's because the AstraZeneca vaccine was deemed capable, okay for people up to 65. So we gave that to people to 60 to 65. So we still haven't vaccinated people between 65 and 70 and people below 60.
Interesting. I had my mother-in-law, her and my father-in-law, they were over yesterday. And yesterday evening, and she's a physician and has a family office, and she administers COVID shots, and she was telling me that, she's like, I might need your help to get people in my office so we can, because when they open a thing of shots, it's like 10 shots, right? Or 100 shots, excuse me, and they have to get through the 100, once they break it open, or it goes bad, right? So, or no, I'm sorry, they open in batches of 100. They order in batches of 100, but they open in batches of 10. So, and she's got to practice, right? And so she's like, if I get a whole new shipment of Pfizer, and I might need your help to get vaccines, because she wanted to give me the Moderna one. I'm like, I'm gonna wait for the Johnson & Johnson one. And so, so anyway, that's
why, Blake.
Why, mate? I mean, they're all very decent. I mean, the sooner you can get vaccinated.
That's what I want to put in my body, man.
Yeah, but I mean, the sooner you can get vaccinated, the sooner you can go back to a more normal, life. That's what I mean.
Yeah.
I've heard arguments about people wanting J&J because it's the old technology.
That's correct. That's why.
Okay, so I figured that might be it.
Put that one in my body than a Moderna one, and that's just my choice. So.
All right. Well, we're going to edit your RNA after face today anyway. All right. So good. No, but I actually heard I don't know what your source is, Steve, but I saw a virologist who said the same thing. She'd rather go with the old tech than the new because we don't know long-term.
I don't know. Obviously, that's
versus two, and so that's
that's not my specialty. My doctor friends tell me that they're all very similar in potency, and they have no worries about side effects. That's the only thing I know. But as I said.
But it is a new technology, the RNA editing.
Correct, and that's. But anyway, that's not a debate for here at all.
Okay,
but,
right.
I mean, there are people that they want. We have our choice. We have the choice of doing whatever we want, and we have different selections
for now.
So.
Yeah, you're very lucky actually to have such a variety of vaccines.
We are. Quantity. And you know what? I'm gonna exploit that too. So because I can.
Yeah. I mean, absolutely. So. They don't even give us a choice because it's such a limited supply that it would be impossible to actually give people a choice. So it's like.
So let's talk about the
euro.
Market. Yeah, so let's talk about the euro. The euro is trading extremely heavy. It's trying to hold some support today, but the FX market's been pretty quiet today. I think we're going to be waiting to see the open today and see how stocks respond, because futures are down. I mean, everybody looks at the markets and like, oh, look, we're near the highs, which we are. And as I said earlier, or during the week ahead video, I think we're speculating that we can actually, break into new highs here. But we're actually, from where we closed on Friday, we're actually down a little bit in the S&P and the NASDAQ and Dow futures right now. But I think everybody's interested to see what happens during the open today, right? So it's going to be kind of I think it's going to be kind of an interesting open. The FX market's been kind of quiet. So I'm more excited to get our webinar for our viewers, or excuse me, the ForexAnalytix subscribers, the Morning Edge. I'm more excited to get to that because we're going to go through all the individual currencies, but then I'll be around for the open when U.S. equities open, because I think that's when all the volatility is going to come. So with that being said, I'm going to pass it over to you guys, Steve and Stelios, so you guys can take over, and we'll see the rest of you in about an hour's time.
Thanks, Blake.
Thank you, Blake.
Thanks, guys.
So good morning, everybody.
Good morning.
Should be a fun week. And we had some news with a ship that's been stuck in the Suez Canal. Apparently, they're trying to...
Chuck Norris is getting it out.
Float it. Actually, I should have got that guy to help. But, the signs are that it's going to be taken away basically within the next, day, 2, 3. So, things are going to go back to normal. Apparently, there's a queue of 450 ships waiting. But it doesn't matter, it's like I said on Friday, I spoke to a couple of friends who are in, one of his a ship owner, and he said, no, it's just some delays, it's going to be done, and we don't even care. So that was his view on it. So things are going to go back to normal pretty soon. Like we said before,
I love events like that. They immediately spark conspiracy theories. Yesterday I had a guy telling me how this all is premeditated and it's a test of the US to China, and I was like, oh my God, get me out of here,
Yeah, and I remember I saw somewhere, was it an article, somewhere on some TV channel, and the title was, will the ship ever be lifted?
No,
no,
never.
I'm like,
that's
what do you mean ever?
It's the end of the Suez Canal. That's it. We'll have to dig a new one.
This thing where they have to make things dramatic, anyway. So that's hopefully going to be resolved soon. Vaccinations, we talked about. The EU is still way behind. And, I have my friends in the UK, and they're all saying, I got the shot, and they're all my age, and, they're ready to move forward. So we're a bit behind here, but hopefully we're gonna move forward as well. And, we got the news about what caused the Friday melt up in stocks. And people are saying, this might be something that pushes equity indices lower. I don't know yet. I really don't. They opened, futures have been lower all morning, but now, Nasdaq is flat. The DAX is down.
S&P is just 0.4%
lower. It's nothing. So the stocks don't really seem to care at the moment. Now the other interesting piece of news which I read, and I'm still trying to get my head around it, is about Bitcoin and, or rather cryptos, where Visa, the credit card company, they said that as a part of a pilot program, they're going to be using how do they call it, stable coin. Basically, I think it's called USD coin or something like that, to settle their transactions over the Ethereum network. So basically, this is going to be an application of blockchain technology into something else. And Visa, they want to run this pilot program, see if it's something they can do. And yes, this is definitely positive for cryptocurrencies, although they're not saying they're going to be using Bitcoin, right? It's not. I don't understand why people are going mad about this. Oh yeah, it's so good for Bitcoin. It's good for blockchain and the technology around it, but I don't understand why. Obviously,
you still don't get it, because everything is positive for Bitcoin.
Yeah, but anyway, I guess people know more than I do. But this is not something, this is not going to solve, let's say, Bitcoin's problem of how many transactions we can do, per second, per minute, per hour. This is just Visa trying to use a different technology to settle their own transactions. So
yeah, to go with the trend and capture some of the.
Anyway, maybe I just don't understand it. If somebody can explain to me, I'll be very grateful. But anyway,
the more you understand it, the less likely you are to make money out of it, because this is not the period that people that understand how things work make money. This is the period of people that think they understand how something works and they're completely mistaken. They make shitloads of money.
Yeah, and I saw the usual quotes and tweets from people saying, "Oh, this is fantastic news! Bitcoin is going to replace the dollar and this and that." I'm like,
okay,
has nothing to do with that. I mean, if you believe that, then good luck. But anyway, it's positive for cryptos. They're rallying again, and we're going to get to new all-time highs very soon, I'm sure.
Why not?
But otherwise, it's been pretty quiet. We're all waiting for Easter weekend next weekend. At least the Catholic Easter. Ours is a little bit further away.
When is ours this year?
It's late. It's like late April, from what I understand. It's like 3 or 4 weeks later.
So we have a chance of actually perhaps having some restaurants open outdoors.
Yes, it's me and you seeing each other. Maybe you never know.
Yeah.
How long's it been since you guys have seen each other?
Not that long, actually. We've met outside a month ago.
A month ago.
Yeah.
Okay. Yeah.
Anyway, so
living the life like gypsies.
Yeah.
Meeting outside, standing up,
Yeah.
Anyway,
roaming around the different areas of Athens.
I look forward to the time where I can leave my house without having to send an SMS message to the government. It's crazy.
I've never done that actually, Stelio. So
well, I actually use a piece of paper as well. You can.
I don't use that either.
Yeah, but I just want to know that if I get stopped, I don't have to pay 300 euros.
Yeah, that indeed.
Anyway, okay. Do we have a guest today?
Yes, we do. Dan Weisskopf with Toronto Asset Management handles the ETF professor, and he is here. If you guys have.
Okay. Well, I'm done. I don't know if Steve wants to add something.
Platinum trying to break out. Just a heads up here. While the rest of the metals are doing more or less nothing. Okay, so we'll have a lot to talk about in 48 minutes from now. Enjoy the interview, Dale.
I love the accuracy, Steve. Nice.
Okay. All right. Thank you, Steve. Stel.
Thanks, Blake.
Thank you.
Okay, Dan, I'm going to get you set up as a panelist now. Welcome to Face, Dan. How are you?
I can hear you.
I can hear you too. I can hear you too, Dan. Thank you very much for taking the time out of the day, an hour before the NYSE opening to be with us. I hope you're on the East Coast so you didn't have to get up at 4 or 5 in the morning like I do every day.
I wake up 4 or 5 in the morning every day anyway. What can I tell you?
We beat the roosters then, Dan. So, our lives are like farmers, right? Up before sundown, asleep after. Yeah.
Yeah. I've always woken up. I've always had like weird sleeping hours. I think part of it is growing up in the markets. So my dad was a specialist and he had weird trading hours as well.
Okay. So. On the NYSE floor?
He actually had a specialist book on both the NYSE as well as the Amex. He was they were the last ones to sell on the NYSE. And sorry, Amex, there was nothing to sell.
Yeah. So, you've answered one of my questions. So, it's a pretty, obvious answer how you got interested in the markets, having your father be a professional, fills orders on the floor, probably traded his own account as well. When did you start getting curious about it? And did you go down and spend time on the floor with your dad? And did that give you the bug?
Yeah, well, I like to say ace and quarters paid for my education, which makes it harder these days, right? No more ace and quarters. I spent a couple of summers, when I was 16 and 17 on the floor of the Amex. Also, worked at Allen and Company, in investment banking.
Before we continue though, Dan, do you have anything you want to show on the screen? Because I'm just showing a blank screen. There is a share screen here, green box, if you wanted to show any charts once we get through.
You know what? No, I'm
okay.
afraid I don't have anything specific to
okay.
show you.
I'll put something up on the screen then.
Yeah, yeah. I mean,
all right.
I will tell you that at Turoso, we wear a lot of hats. And this conversation, frankly, could go a lot of different directions. And that's part of the reason why I don't have anything specific to show you.
All right.
Let me spend a couple of minutes telling you a little bit about myself, not because I got an ego, but you can pick my brain however you want, and hopefully leave a little afterwards. I don't, and by the way, I don't know your audience as well, so I think that's I need some direction here.
We trade everything, bailiwick being what spins around the dollar, FX, but awareness of crypto, awareness of stocks, bonds, everything. If it moves, we talk about it.
Cool. And can you see me at this point or no?
You'd have to turn on your video camera for us to do.
Why not? Yeah, we'll do that just for fun.
Okay.
Okay. So by way of background, been in the business since '87, and started off.
That was a good year to start.
Yeah. You know what, Dale? A little scar tissue goes a long way. So I definitely come from the vantage point of being a skeptic of these markets. But on the same token, where I started, I had a lot of exposure to venture capital as well. So beyond that, ran a hedge fund that was focused on small caps, basically asset light businesses, and spent some time at UBS. So I have a perspective of what the wirehouses do. But for the last 20 years, I've really been focused on ETFs. That's why they call me the ETF professor. In the ETF think tank, I work with advisors, help them, build portfolios and do due diligence on calls. As I joined Turoso about 2 years ago, Turoso's $6.5 billion ETF shop. I'm one of the PMs. We also, I heard one of your speakers talk about Bitcoin and the blockchain. We manage the largest actively managed fund in the space. So happy to talk ETFs, happy to talk blockchain, happy to talk Visa or any of our names. BLOK happens to be the symbol if you care.
BLOK is what, the fund?
That's the ETF, correct.
Okay. All right.
And I think if I had to try and take a shot at answering why Bitcoin is up and the Visa news and whether they're related, I don't think they're related, but I definitely agree with one of the comments by your team that there's momentum behind Bitcoin, and so I think there's almost gravitational pull for us to reach new highs. But it's not going to be linear. There's going to be volatility.
Okay, so I have a couple listings for BLOK. Amplify ETF,
yes,
First Trust. That's it.
No,
and this is,
it's Amplify.
Okay, and this is Turoso's ETF on it.
We're the sub-advisor, and since it's actively managed, we're the ones who pull on the trigger, and they're basically like the BlackRock. So they're the wrapper.
All right, and this is a blend of, say, Bitcoin and Ethereum and Litecoin, or is it predominantly Bitcoin?
Well, to be clear, we can't own Bitcoin specifically. So the way we break it down
It's like GBTC.
Correct. GBTC is a small position, and MSTR is also a small position. Not a small; it's one of our largest positions, and we're getting direct exposure. So that's roughly 8% of the fund. But since it's actively managed, we actually talk to the CEOs. So Michael Saylor is somebody I've spoken to in half a dozen times. And actually, I should have highlighted another thing that might be interesting to you. Every Thursday, we have a happy hour. We've been doing it for something like maybe 35 or 40 weeks. And we have different guests, including Michael Saylor, Michael Novogratz.
Mark
Similar
Yusko.
to, we do, yeah, we did.
All right.
And we have the kind of conversation you're having with me.
Pomp
we haven't gotten yet, but
okay.
we're having Ross or Tyrone Ross this Thursday.
So many millionaires have been made in everything. Let me ask you, Dan, you're a veteran. Okay. So, everyone makes comparisons to what happened in 2000. But, that was really .com specific. You could throw a dart. Commodities on fire, right? Stocks on fire, crypto on fire, real estate on fire. Anything, the everything bull market. NFTs, people spending $1 million for digital art and an original Twitter quote. Have you ever seen an environment where everything is good at the same time, except for maybe, bonds are going through a little bit of a mini bear market in the treasury sector? I have never seen anything like this.
Yeah, no, this is kind of stupid. With the exception of WeWorks might be down today, and SPACs. You have to throw that one.
Oh
in
yeah,
too,
that
right?
Too. I mean, things that I don't even understand. I mean, I've been trading legacy markets for a long time, and even all these new products. I feel like my parents now, when computers came out and stuff, where I can't wrap my head around a lot of these new investment vehicles.
Yeah, and to your point, you got to be real careful with how you're skeptical and how you express that. GME, perfect example, right? The shorts got really, really hurt badly, but had the correct thesis, right? So there's lots of room for skepticism. There's lots of fraud and bad stuff in the blockchain. Small cap holdings, lots. So what we like to say is sometimes it's what we've avoided in block that have been our biggest wins.
Yeah, I agree with that. Sometimes avoiding the mistakes is more important than the winning and profitable trades. It's a one mistake business sometimes, isn't it, Dan?
Yeah, I mean, I forget which hedge fund it was who basically had a get bailed out on GME, right? But yeah, making mistakes in this market and in any market can be really distracting and really, really super painful. And we try and be super disciplined on the amount of exposure we take on any one name, and I think that keeps us out of trouble. And if we can't speak to management, we don't buy it. That sounds like an assumption that most people would make as active managers, but it's not.
Right. Okay. So as in investment managers, is it an RIA? What's the designation? Do you take individual accounts? Or is it mainly for institutions that you're working with?
Yeah, great question. So we're an SEC RIA, right? And we've got a small wealth management book where we've got 6 planners and wealth managers involved with about 600 million of the 6.5 billion. About, I think, 1.9 billion of the 6.5 is through ETFs that we've launched, including, which would be the biggest, RPAR, which is the risk parity fund. Ray Dalio, kind of built that thesis, and these guys have wrapped it in an ETF. We also have about 5 funds associated with SoFi under that, 1.9. And then, listen, Block, $1 billion too. That's a big chunk of it too. And then, we also have outsourced CIO business too. So I guess to answer your question, if somebody wants expertise in ETFs, whether they're a financial advisor, an individual, they should call me, and we'll figure out a way to work together.
Okay, I'm getting a question from one of our attendees. You have any thoughts on INVU?
INVU, I honestly don't. Let me see. Let's see. INVU. What is it?
I don't know. I just got that question asked. How about ESG? Is that an ETF?
ESG, I do have a strong opinion. We had Burton Macchio, who is one of the really anchors in the ETF marketplace, and professor at Princeton, and we had a big debate on ESG. I think ESG long term will become important, and money flows are going that direction today because of the younger generation, and people just simply want to do good. I think to some degree, frankly, I think that in a bull market where everything's going up, it makes sense that people try and do good with their money, right? And ESG would be a natural way to express that. Why it works is also that just by virtue of flows honing in. And my last comment on in buying the same thing, my last comment is that ESG has tended to be naturally skewed away from old oil, right, and long, the good energy space, we'll say, right? The clean energy.
Yeah, clean coal.
Yeah, exactly. So it's worked in this environment naturally.
Yeah, the only clean coal I knew of when I was younger was coming in with black all over me and using soap to get rid of it. So
funny.
Why,
I get it.
why don't you well, they used to actually heat our buildings on the south side of Chicago that way. So, I would go down and play with the coal. So anyway, looking at what happens in a bull market in crypto, are they going to have any kind of, do you think, like they do on indices, any kind of reverse funds on crypto where I know the majority of people love it and only want to own it, but you think the ETF world is so creative? Go ahead.
No, I you know what? I welcome it. I think it makes sense.
Give people a way to hedge their physical in their wallets and things like that, right?
Well, and it could be done. It could be done through the miners, right? Principally. In case somebody isn't real familiar with the way the mining side works, let me take a step back, because we're long about $250 million, or 25% of the funds long the miners, and I visited a number of them, and they're data centers, pure and simple. Okay. And it makes sense that the miners are a leverage play, same way GDX is a leverage play to gold.
Right.
So it would make sense that if, as an example, Bitcoin goes down, the miners would fall harder, right? But here's the reason to be careful. And
why is that? Just because demand for Bitcoins sets a tone for demand for the mining and creation of more of them, right? Is that the reason they would get hit harder?
Well, if
what would be the reason?
The fundamental reason, which probably most people don't get, is that the miners make money off of price and hash is the difficulty rate, right? And what we're looking at on a go forward basis is that if price goes up, it's going to draw more miners into the space. So more competition is reflected in the term hash, right? So when it gets harder to mine, you got to have the price appreciation, right? And they don't work
cost of production.
Exactly. Exactly. Right. You know, so it would make sense that they would get hurt harder. But you know, the problem today with going short on the miners, and again, I'm talking my book because I'm long, is that, you know, this industry is set up right now to do $15 to $20 billion in revenue on a go forward basis. And once the facilities are set up, it becomes a printing machine, right? So with that kind of revenue, you can see huge margins, right? And there, you know, a lot of them could go to new highs overnight, and then you've got nothing holding them down, right? You know, new highs can become more new highs,
right?
And the cost to borrow can go really, really high. So it could be a dangerous game.
That's interesting. That's the first time I've heard that. So that's kind of going to be the tagline from you today, Dan. It's that Bitcoin goes down, miners get hit harder. I wondered if there was anything with what's going on in the market right now. Are you seeing the use? Maybe it would be kind of a consensus type of thing, bearish ETFs in equities, where, you know, we're approaching 4,000 in the S&Ps, and you know, people have started to believe for the last year or so, and they've been right, that hedging is a waste of money. You know, it's, you know, why buy the puts to protect it when they just expire worthless? And I think that seems to be the sentiment. Are you seeing a lack of demand for hedging S&Ps approaching 4,000, where people just feel like, you know, why should I even, you know, give up a few points on even ETF when you know, all the market does is go up?
Yeah, Dale, I mean, there are a lot of people who feel like they're smarter than they probably are today, because the market just goes up, and they don't fully appreciate the need to be diversified, right? When you lose money, that means you're diversified, and you're hedging, and nobody knows when the market's going to go down, but it doesn't move in linear fashion. But to answer your question, most of our clients who I speak to are financial advisors, and yeah, they're seeing some reason to be, you know, looking for some diversification, but it's hard for them to sell it to their clients. And so I think there's a lot of complacency out there.
All right, how about some of the VIX products? You know, I lost a ton of money in this one called TVX a long time because of the decay and the rollover. How do you tell your clients to address the decay and costs of ETFs? And some of them, you know, reverse splits, and, you know, reverse splits are kind of like a, you know, a nail in the coffin for the position. If you're going into a reverse split, you probably held it way too long. How do you avoid those? Is that part of the due diligence process before you go into an ETF, is to know whether or not it's vulnerable to a reverse split?
Well, back in 09, I when I was at UBS, I held an education seminar around them, and it was an awkward event because, quite honestly, UBS didn't want me to do it, but it needed to be done. So I had all the issuers gather together at our restaurant, and we had about 50 people to talk about it. And back then, you know, when you bought a product that was leveraged, in about 10 days to 2 weeks, you'd get the prospectus. right?
Right.
And it would outline what happens. Well, today we all know that. So I think the answer to your question specifically is these are day trading products. If you hold them for a week, fine. But if you hold them much longer than that, shame on you, because the decay will have an impact on you. Now, having said that, if you get the trend right, they actually compound better, right? But that's hard to do. I think people need to, and this is my recommendation. And I think from a financial advisor perspective, I tell everybody, don't bother, because you got to get people out when things are going bad, and then a lot of times they don't want to get out, so they're like long a week holding it. But as far as the reverse splits, I used to have these long conversations with some people who said, "Oh, it's going to zero. It's going to zero." And again, shame on them for not reading the prospectus.
Yeah, I've done that. In fact, I haven't even read the owner's manual on my car. So anyway, so is there any VIX product that you could consider it being a position or hedge against the rise of volatility? What would you say would be the best ETF to own during a period of high volatility that lasts more than a week, that could last for a period of months? Is there anything out there, Dan?
Yeah, I mean, we've got a bunch of ETFs that we use in our portfolios. You got to know how to use them. And without knowing your audience, I'm hesitant to give specific.
Well, how about currency traders? They're all leveraged players. So these guys have blown accounts, and they've had margin calls, so they're all really the 10% of the upper end of the pyramid spec type people. I know they all have their retirement accounts and stuff, but they're used to risk. Our audience is used to risk.
Yeah, I mean, but here's the thing. I mean, to your point, the VXX has done terribly, right? We know that. And so if you were to take a position in that, you have to be super quick, right? And everybody focuses actually on the VIX, and they actually should be looking at the MOVE index as well, right? And the MOVE index telegraphs, the volatility in the fixed income market, and we all know, right, that it's the bond market that really leads the equity market, and the Fed proved it, right? The Fed came in and put a bottom into the market back in March last year, and all of a sudden the equity market followed.
Yeah, and it was mainly jawboning and corporate and junk. Okay, so you're a veteran, Dan. You're probably younger than me. Most people are. But how do you assess the fact that the treasuries, which are supposedly the flight to quality in the interest rate arena, actually took out their COVID crash low, while LQD and junk have held up better than the quality being treasuries? Did that surprise you?
It surprises me, but arguably they're used differently, right? The one's duration and one is a coupon. So that would be my response to that. Meaning that the LQD, at least you're getting paid to hold, and people didn't sell it for that reason, right? And there's a disconnect on why people are owning TLT, right? A lot of people are owning TLT as a hedge, because there's no other reason to own it, because otherwise you're going to lose money, right? So
you actually get a dividend yield on LQD and junk. You get a yield on that. You get paid to hold it. And I'd like to wrap it with this. So guys like Gunlich really believe that one of the biggest bubbles, and we know it because the airlines didn't have any money because they poured it all into buybacks, and corporations have been going to the debt markets for years now, and basically a lot of that has been used to buy their own stocks, so they have margin accounts on their own stocks. What would be something for someone to consider, someone like me that wanted to be positioned in case the corporate bond market came apart? Is there a good inverse ETF, bearish ETF on corporate bonds? That's liquid and you don't have to make an appointment to do a trade.
There's have you ever heard of IVOL?
No.
So IVOL is a symbol. It's a quadratic interest rate volatility ETF.
Okay.
It isn't going to give you a lot of volatility as a trader, but if the market craps out in the fixed income space, this should hold up fine, right? And so I would count this as a diversification strategy.
I see.
And it's run by a woman named Nancy Davis, who, within the context of the fund, which is 85% long the Schwab TIPS ETF, and the balance is trading in the volatility space.
Okay.
All right. Fixed income.
All right. Well, really, I think we covered a lot of ground, don't you, Dan? I mean, really, we did. And it's made some people thirsty. Nuno Martini. Now I know your name's Martin. Wants a link. He wants a link for your happy hour.
Cool.
If you could post it, or
do I send it to you or post it?
Well, you could post it right here in chat if you want. If you see the chat.
I don't see the chat for some reason.
Okay.
You know what? You can find it on the etfthinktank.com.
Okay. etfthinktank.com. Can they find it on Taroso on the website there?
Just punch in etfthinktank.com.
Okay.
I see what you're showing right here.
Yeah. Okay. All right.
And
right there. ETF Think Tank coming up.
Perfect. There you go. And if you go down lower, you can sign up for it. But it's a good website, and anybody can reach me at dweiskopf@tarosoinv.com.
Okay.
And shoot me an email.
You know what happens when you survive an interview with me, Dan? You become even though you're really not much of a trader, you're more of an investor type guy, you're still have become my trading warrior brother.
Good.
And have also become our go-to guy for ETFs. I'd like to get you in the rotation for keeping us abreast as market conditions change, and of
course,
what ETFs people should consider. And I really want to thank you for your giving spirit to come here and share your wisdom with us today.
Well, I enjoyed it, and thank you very much. And I know a lot of people want to get on your show because you booked me 3 months out, so there must be a lot of demand.
See how time flies?
Yeah, no, absolutely.
And perception is everything.
I love it. I love that.
All right. So anyway, Dan, thank you so much for being here. It was a pleasure talking to you today. Good hunting, and may all your ETFs work out for you. Okay.
Thank you very much.
All right, that's a wrap.
See you in the happy hour.
All right, go see Dan at happy hour, and remember, don't just count your cocktails, count your blessings. And we'll see you all tomorrow for Turnaround Tuesday. Good hunting, and thank you.
Dale, that's great,
you guys. All right, Dan.
Thank you.
It easy.
Bye.
You could join the team for the Morning Edge in 15 minutes. Adios.